Hello, everyone, and welcome to this week's edition of the Grain Gauntlet. As always, 5 questions from current clients and at least 1 question from prospect. This is Patrick. I'm Josh. You ready to go?
I'm ready to rock.
All right, lots of questions this week in the aftermath of the trade deal with China. So lots of emphasis on soybeans, and made sure and kind of include a question as it relates to corn as well. So
I'll do my best.
all right, sounds good. First question, what does it mean that the USDA is putting out a WASDE report before the government shutdown is over?
Wow, it's a shocker, really. They've never done that before that I can remember. I talked to a lot of people that would know who have long memories. They've never seen a government shutdown where we had a WASDE report. That's weird. I also don't think the USDA wants the marketplace to think yields are going to come down without demand maybe coming down and balancing that off somewhat. So to go as long as they would to skip November after skipping October, with all the information that came into the marketplace on how cruddy this crop is compared to what it was expected to be, I think was a necessity. What's weird is it came out on Friday evening. Okay, that's weird when news usually shuts down. The other thing that's weird is that they moved it from the 10th of November to the 14th. So that tells me they weren't preparing for this because they would have had it ready for the 10th, that they're starting to prepare for it now, and they need an extra 4 days to get it done. Bottom line, this is going to be a big report. There's only one more that really changes things, and that's in January, because typically December they leave things alone.
Okay.
So big report.
Yeah, that definitely suggests there's an urgency to get some numbers out that would really impact the market. I don't think they'd go to this extent if they were going to put out a report that didn't change anything.
Yeah, of course. Yeah, I agree. And, it is important for the market. That is the USDA's job with the WASDE reports, is to get us accurate information so corn and soybeans can be priced as accurately as possible.
Okay. All right, next question. Do you have a target where you think this bean rally will top out?
Wow. Yeah, if I had a crystal ball, I could do that, but I don't have a crystal ball. I do think it's a very high probability we get to at least $12. The reason is supply and demand indicates that we should rally at least to that point. Historically also says that $2 range means isn't anything extreme, so 10 to 12, we should be able to get to 12. So with that said, could we go higher? Sure, we could go a lot higher. We go $20. Okay, I'm not predicting that. My crystal ball is cloudy. I don't know that. But all we need is weather in Brazil and South America cut their crop big time, and we could see a big rally. So we're looking at $12 before we make any new sales. I don't know. I'm not predicting that as a high. I'm just predicting that as a highly probable area that we can get to.
Yeah, like a current target, something to aim for, subject to change later, but no reason to think that this is the high right now.
No, and it's people that tell you it's going to 1450. Come on, people. Nobody knows that.
Yeah, it would require more than just what we have right now.
Yeah, we're just trying to give you what is probable, based on history, based on fundamentals, based on normal ranges and all that kind of stuff. $12 is a probable price we can get to.
Okay, sounds good. All right, how much of the new demand from China is priced into the market already?
Again, who knows, man? I don't know. Does anybody in China, do we have anybody in China that can tell us what the communist government has priced in? I have no idea. I do know this is important, and why we think prices can get to $12. The USDA has cut exports down to 39% of total demand this year. With the deal that has been out there, we should have enough exports going to China to meet USDA export demand. Not to increase it, but to meet it. That means, again, normal price range of $2, we should be able to get to $12. I have no idea what's priced in and what's not. How do you figure that out?
You're right, because obviously some of the markets reacting to now is they're coming for the two things combined: the purchases from China and the likelihood of a lowered yield. That it goes back to the first question, which is why the USDA needs to jump in and get that adjustment made. But the USDA has been like us. They've obviously been expecting some sort of a deal with China to be made all along, and that's why the demand numbers are going to probably fall back into what they originally put out there.
You know, my calculations were that if China bought as many beans as possible that Brazil could sell, and that Argentina and Uruguay, South America as a whole, could actually sell, that they would still need another 20% to meet their normal import of soybeans of 114 million metric tons. That is about what the deal calls for. For us to sell about 20% of our production to China, and that should help us meet our export demand for this year. Next year, years after, we kind of go back to 22, which means we need to grow the acres we used to grow beans.
Okay. Will U.S. beans quickly price themselves out of competition with Brazil?
Yeah. How are we doing compared to Brazil price right now?
Oh, now we're finally higher. Yeah. Well, as of the last 3-4 days of trade activity pushed us above when we've been well below them. Obviously, we were well below, and you had the China tariff that made us more expensive. But yeah, we very quickly have surpassed them in price. They become the discount. In fact, right before we're sitting down to take this, Orders came out with an article talking about how now Chinese soybean traders are looking to book purchases from Brazil because they become a discount to us.
So now it's a battle of this price level. And so maybe this is a fair price level right now. And the only thing that will raise things above this is weather issues in South America.
Right. Yeah. Maybe lower yields, but
Yeah.
And more yield than U.S.
right. Yeah. Exactly. Yep. All right. Last question. This one from our prospect. When do you think corn prices will see their biggest bounce?
I expect when the bin doors are totally locked, any pipeline clogging is done, and it's happening very quickly. So I expect the rally to start now and continue through February with a potential dip once December is no longer the front month and March takes over. There's a 15-point spread roughly between December and March. That usually comes together. March usually comes down to a level that December had been trading at the majority of time. So to come down 15 cents before we continue the rally into Santa Claus time, I would not be surprised by. But I do expect us to get to, front month futures got to 490 last year. December futures got to 504 in February. We made a really cool sale then. And my expectation is that we get to those levels again by mid-February.
So around the same time like you was last year. Okay, good. All right, well, thank you for everyone for the questions. That's all for this week. If you have a question you want to have heard answered, go ahead and email it to adminstaff@hedge-plus.com, and we'll talk to you again next week.
Have a good week.